What's up, YouTube? Welcome to another episode on the channel. This is episode 4 in our series on growing a small portfolio, and we started this series with a portfolio size of $650. This is the 4th in the series. In our last episode, we were anticipating the put contract that we sold on ticker symbol LABU to expire worthless, and then for us to be able to start another contract. But during the trading day, things happened that we did not expect, and so we will talk today about our experience last Friday with ticker symbol LABU and the put contract that we sold. We will also look at the contract that we entered into, and we will provide an update on the portfolio. And you want to stay tuned till the end of this episode, as we will be talking about one of the put contracts that we mentioned last week. Again, the market was very interesting, and that particular put contract went wild, and we will talk about what kind of immense value you could have seen if you had sold the put contract on that particular stock. Alright, let's get it. So as you will see in this chart, Friday was a very interesting trading day. This is Friday the 3rd of March. It was a very interesting trading day for ticker symbol LABU, and if you look at the chart here, the day started with ticker symbol LABU opening at about $6.44, which was below the $6.50 put strike price, which means that at the beginning of the day, we were at risk of being assigned. Not our preferred option, but what was interesting was ticker symbol LABU did rally during the day, and by the time we got to the middle of the trading day, which was about 12:10 p.m. during the trading day, ticker symbol LABU was rising above the $6.50 mark. And so what did we do? We ended up buying back our put contract and entering into a new put contract, and we will show you what we did and what was the impact of those trades on Friday. So you might ask, why did we buy back the put contract that we sold on Friday the 3rd of March? The reason is because if ticker symbol LABU had dropped in price below the $6.50 mark, we would have been assigned, and Tastyworks, who's our broker for these trades, would have charged us an extra $5 thereabout to buy those shares because we were assigned. And so what we found out over time from using Tastyworks is if you exit the contract before expiration, then you avoid paying that $5 charge. And so because we were able to buy back the contract at a cost, and we will show the cost shortly, that was less than that $5, we have effectively saved ourselves some fees that would have come to us and would have increased our transaction related costs. And we will show you the breakdown now. So this is where we are so far with ticker symbol LABU. If you remember, on the 21st of February 2023, we sold the $6.50 put and we received an $18 credit. Of course, we were charged a fee of 13 cents, which meant that we had a net receipt of $17.87. On the 3rd of March, as we mentioned, because of the choppy nature of ticker symbol LABU, when the price rose above the $650 mark, what we did was we exited that trade by buying back the put contract that we sold on the 21st, and we bought that contract back and paid a $3 fee to buy that contract back, and we were charged 13 cents. So our actual cost of getting out of this contract was $3.13. Remember, if we had been assigned, we would have been forced to buy ticker symbol LABU at $6.50, and we would have been buying it if the price had dropped below the $6.50 mark, and we would have also had to pay a $5 fee to the broker for assignment. But because we were able to buy back the contract, we effectively have reduced our transaction related costs by about $2. And so what we then did immediately was, because we anticipated that ticker symbol LABU was dropping in price, we sold a put contract for a lower strike price, and that strike price was the $6 strike price. And for selling that put contract for a $6 strike price, which will expire on the 17th of March 2023, we received a credit of $17.50. And when we back out the brokerage fee of 14 cents, it means our net credit was $17.36. Now, this means that our total balance from starting at $650 portfolio is now $689.83, which translates to a gross increase in cash flow of $39.83, which is 6.12% return after a projected 32-day period. Now, if we look at the calculation of the return on investment so far, if we assume that we're able to make 6.12% returns every 32 days on a $650 portfolio, that will mean that we will have an annualized return of 69%, which would translate to a portfolio size of about $1,103.74. As you can imagine, we will continue to monitor the price fluctuation of ticker symbol LABU before or on the 17th of March. Again, as is the case with put contracts, there are two possible scenarios here. Scenario number one is the price of ticker symbol LABU drops below the $6 mark on or before the 17th of March, in which case we will get assigned and we will have to buy 100 units of ticker symbol LABU at $6. And then if that happens, we can start selling covered call contracts to generate further cash flow on our portfolio size. If that doesn't happen and ticker symbol LABU is trading above the $6 mark by the end of play on the 17th of March, our contract will expire worthless, which means that we will get to pocket the $17.36 premium that we've been paid, and we can then sell another put contract to carry on with this wheel strategy. And what is the current situation with ticker symbol LABU? As you can see on the trade day for the 6th of March 2023, there was a bit of a sell-off and ticker symbol LABU closed at $6.36. It is still above our $6 strike price, and after hours trading, there seems to have been a little bit of a rise. If we look at the daily interval for ticker symbol LABU, you will notice that ticker symbol LABU still seems to be trading above the $6 price. So we anticipate that if this trend continues, if ticker symbol LABU gets to that $6 mark or just above it, it should start bouncing back to go up. So we anticipate that, all things being equal, ticker symbol LABU should close above the $6 mark on the 17th of March, which means that the put contract that we've sold should expire worthless and we can start the cycle all over again. All right, let's talk about the stock that we mentioned to you as one of the potential trades that we could have entered into in our last episode, and this is ticker symbol ESPR. Now, what's interesting is that ticker symbol ESPR has been conducting some research into a long-term cardiovascular drug, and the outcome so far has been positive. But what is interesting is that when the market opened on the 6th of March, ticker symbol ESPR, in spite of that good news, saw a drop in its price. It went from $6.32, which it closed on Friday to opening at $5.40, and it dropped all the way and closed at $5.07. But that's not the story here. The story is the option chain for ticker symbol ESPR. If you look at the March 17, 2023 expiration for ticker symbol ESPR, you will see that the $5 put contract could generate as much as 30 cents per share, and this translates to a return on collateral of about 6% for an 11-day trade. Now again, as is the case with put contracts, what this means is if the price of ticker symbol ESPR drops below the $5 mark, anyone who sells such a contract will have to buy ticker symbol ESPR at $5. And if that doesn't happen, the contract will expire worthless and that person would have made a 6% return. The flip side is if such a put seller does get assigned, they can start selling call contracts for that same ticker symbol that will expire in April 2021. And when you look at the April 2021 contract, currently the call contract at that $5 mark is trading at 60 cents, which translates to an almost 12% return in cash flow generation. Of course, by the time it's time to start selling those contracts, the price might have gone down, but this shows an asset with a significant return potential. Again, this is not something that should be construed as financial advice, just making you aware. Do your research, determine what your risk appetite is, and if this makes sense, then it's something you might want to look at. That's it for this episode. Thanks for staying tuned. If you haven't done so already, please hit that subscribe button, hit the notification bell so that you get to see new videos as they are uploaded to this channel, and you don't want to miss the next episode as we continue to grow this $650 portfolio and see where we get to. So far, the returns have not been bad. You can also check us out on Twitter, Instagram, and TikTok. See you on the next episode. Take care.